You're listening to the One Day Advice podcast, where your hosts Nick Riley and Paul Henderson are going to take you for a ride inside the world of personal finance. Together, we're going to give you a fully transparent, behind-the-scenes look into the financial services industry, helping you to optimize your financial life along the way. There's a big buzzword in the industry today, and it's the F word. By F word, we mean fiduciary. So today we're going to be diving a little bit deeper into what it means to be a fiduciary. For the listeners out there, you've probably been told that if you're looking for a financial advisor or a financial planner, you have to make sure that they're a fiduciary. Well, how do you make sure and do the due diligence to ensure that you are speaking to an advisor who is in fact a fiduciary? So I'm sitting here with
I haven't been told that. You should. You should be looking for a fiduciary. So let us be the first one to tell you.
Absolutely. So I'm sitting here with Paul, and Paul, will you give us an overview of what it means to be a fiduciary?
I will, because it is wildly important, and it's well. Here's the definition. It's a person or organization that acts on behalf of another person or persons, putting their client interest ahead of their own, with a duty to preserve good faith and trust. And yes, I'm reading that because I think it's important that it's not just me that you have to believe. This is Investopedia, but at the end of the day, a fiduciary means that you're bound legally and ethically to act in someone else's best interest. And this is why we feel so, well, I'll speak for myself. I feel so strongly about this. Like, it's absolutely crazy to me that there are people in this industry who don't have the legal and ethical requirement to act in the best interest of their clients. So there's my editorial and definition of a fiduciary.
Yeah, perfect. Well, so that kind of brings us to, so if our listeners are trying to decide whether the advisor that they are talking to is a fiduciary, what are some of the things that they can ask their advisor? And for one, you can just ask them straight up, "Are you a fiduciary?" And see how they respond. But also just learning about how they are compensated and in what ways can they be compensated. If they can be compensated by commissions of financial products that they sell, that is a red flag. That presents conflicts of interest in these financial products that might not be the best option for the client or the end consumer. I guess you can put it in those words as well. But so Paul, are all advisors fiduciaries?
No, that's because advisor is an unregulated word that anybody can use. So no, you can find an advisor who has no experience, who got hired because they're an excellent salesperson, and you can find an advisor who has 30 years of experience in the industry giving amazing fiduciary advice. They can call themselves the exact same thing, which is pretty helpful, right?
Yeah, and it's a title that someone straight out of college, no experience, can have from the beginning. So you look at, even in real estate, for instance, there's a varying level of knowledge and expertise in the line of real estate, and really for all careers, for a matter of that fact. But the advisors that, whether you're a financial advisor, financial planner, those names are all used interchangeably. There's people that have successful blogs out there that are personal finance gurus that can essentially claim to advise people on their finances and all that. They aren't regulated. So, for a fiduciary advisor, we're talking about financial advisors who are regulated by the SEC, by FINRA, and have a standard to hold up to. And that standard is putting their clients' interests ahead of their own interests. And that can be in the form typically of a fee-only arrangement. So by fee-only, we mean having a fee structure that is either based on a percentage of assets that the advisor manages, or a flat fee schedule on a monthly or quarterly basis, or a hourly basis.
And we do not mean fee based, which we have a whole nother conversation recorded on that. But fee only is an important distinction between fee based. And since we've come out swinging a little bit, I'll just say, Nick, do you think if you're not a fiduciary, are you a bad person?
I'm not going to go as far to say that a non fiduciary is a bad person.
I don't think so either. I just want to be somewhat fair.
Yeah, exactly. No, there's non fiduciaries out there that set their own standards of professional expertise, and they personally want to do what is best for their clients, and they might not be a fiduciary or be able to hold themselves up as one. So we're not criticizing those people. A lot of the limitations exist from the companies that they work for, because the overarching companies, like a insurance company, I'll use as an example, has insurance products, and all those products have different fees built in, and some products will be more suitable for some over others, and a insurance salesperson who sells those products could really want to do what's right for the client. But when they aren't operating as a legal fiduciary, you can't know for sure. So if you know your advisor really well and you trust them, you have a relationship with them, you ask them how they're compensated and why they recommended this product over other solutions out there. And it's always important to get a second opinion if you're talking to a non-fiduciary advisor.
Yeah, I would second that and just say it's fiduciary is a really quick way to know that you're dealing. Well, again, my bias is going to show through here. It's a great way of knowing that the person is working in your best interest. And I think from a consumer standpoint, if you don't have a strong connection to someone, it's the best starting place to make sure that you're in a good situation, and you don't need to take every bit of advice with a grain of salt because you're not sure, did they need to hit a quota this month, or is this the one time that maybe they've decided that, well, they're just going to push a product through. So in my opinion, it's the easiest way to protect yourself. But yeah, I know people who are non-fiduciary advisors, and it's a choice, but
yeah,
yeah,
absolutely. So as far as what fiduciaries can charge, there's a lot of varying rates out there, and it depends on the type of service you're being provided as well. So for instance, on an hourly rate, there might be advisors charging $150 an hour to say, we'll just say $500 an hour, and someone charging $500 an hour might be working with high impact financial decisions that an hour of their time might perhaps save you $10,000. So there's a lot of value attached to that. It's not just the time value that it takes that advisor. Whereas $150 an hour, they might be doing more of a coaching relationship or just kind of broader education. And then you get into the realm of kind of the percentage fee on the assets that the advisor manages. So industry average is around 1 to 1.5% historically. And that has crept lower and lower with the implementation of technology. For instance, One Day Advice, we charge less than 1% because we are cutting out the middleman, the large institution, and able to provide further cost savings and pass those on to our clients. And technology enables that. Well, there's still advisors out there that are charging 1 to 1.5%. So that brings us to talk about what you should be getting. If you are getting charged over 1%, what you should be receiving. And I know, Paul, you've got a few things to add to that.
Well, I think there's a good parallel here. If similar to the fiduciary, non-fiduciary, you can charge 1.5%. You can charge a lot of money if you're providing if your client feels that you are providing enough value to do that. I would say, if I'm the client and I'm looking at someone who's charging 1% or less, I'm going to feel differently than someone who's charging 1.5%. I'm going to start wondering, what are you doing with that fee, and why aren't you using technology? Why do you still need to charge me this much? And is this funding your lifestyle, or are you really trying to make sure that you are saving me as much money as possible, and kind of living into that fiduciary duty. I think it's possible to charge more, and there are people who, for example, someone who specializes in, let's say, dentists in Alaska, maybe they're going to charge a bit more because that's a very unique situation, and there's not very many people with that experience, and they can only work with, like, that's just the market, right? They can only work with so many people. They might charge more than another advisor who has a little bit more broad reach. So that could be an example. It could be, maybe you are working with someone who, or an advisor who is very involved in the community and puts on great community events, and that's not necessarily, like, if that's what you're excited about and you want to go to those community events that are sponsored or underwritten by your advisor, that could be a good reason to pay a little bit more. But to me, the question is, you always need to be asking yourself the question of, like, why am I paying this rate? Like, I'm paying above market. Am I getting something for that? Is there a reason that I'm paying above market?
Yeah, exactly. And I think there's a lot of traditional advisors that I've worked with in the past too that charge more than 1%, and they claim that on their stock picking abilities. You should not be paying over 1% for investment performance from a financial advisor. That is just I won't go into details on this episode, but investments don't have to be that complicated. So a lot of the value around that. So if they're charging over 1%, you should be getting in-depth financial planning. You should have a financial plan. They should be addressing big financial decisions in your life and be proactive on that. You should not be paying over 1% for investment management.
And by that, you mean, like, if I want someone to place trades for me really well?
Yeah, exactly.
I don't need to spend that much.
So, people, there's firms out there that hold themselves as fiduciaries and, charge over 1% for investment management. And yes, technically they can be a fiduciary because they are providing a fee only service, and they aren't charging commissions on the trades that they're placing, but they're charging your premium for strategically placing those trades and trading your portfolio and trying to beat the market. So, that's kind of a fuzzy line between, what it means to be a fiduciary in that case. But ultimately, if you're paying over 1%, I think in today's world with technology, you should be getting financial planning attached to that. And it shouldn't be a purely a investment management type of relationship, if that makes sense.
I'd say financial planning or more.
Yeah, absolutely. So I know this is a meaty subject that is definitely important for people evaluating their financial advisors, financial planners. Would love to answer any questions that our listeners have specifically on this. We do get questions all the time of, like, is my advisor a fiduciary if he's offering to sell me this product? And we had someone recently, think that they were working with a fiduciary advisor, and that fiduciary advisor sold them a high cost annuity product, and so that's just a red flag right there that person was not the fiduciary that the client thought they had. So definitely some warning signs out there that we'd love to help our listeners be aware of.
I was going to say, we offer a half hour to everyone. So if you have questions, ask your current advisor, but also you can send us your portfolio, just your tickers, and we can tell you what type of funds you're in, or give you some feedback as far as, those fees are fine, or those fees are, I'm pulling my hair out because I am frustrated that people are still paying this much. And I think if you're, it's worth having a second set of eyes look at those. And if you don't know what you're paying your advisor, definitely ask for a second opinion from somebody, because that you should know. You should be able to figure out exactly what you're paying. And if you don't know, that's, to me, a big red flag of, you're probably paying too much.
Absolutely. Well, hopefully this was helpful, and I'm sure we will discuss this topic in further detail in other episodes.
We will revisit the term fiduciary.
It's a word that will often be brought up. So we wanted to make sure our listeners were aware of it if they were not already. but it is definitely a very important buzzword in the industry today and in evaluating an advisor. So that being said, thanks for listening. Hi, I'm Nick Riley, the founder of One Day Advice. If you like what you've heard, we'd greatly appreciate your help in spreading the word. After all, we are financial educators, not marketers. Thanks for listening, and remember to leave us a review.
Nick Riley is the founder of One Day Advice, an independent registered investment advisor. Paul Henderson is the director of financial planning at One Day Advice. Both Nick and Paul serve as wealth advisors to their clients. All opinions expressed by Nick, Paul, and podcast guests are solely their own opinions and do not reflect the opinion of One Day Advice. This podcast is for informational purposes only and should not be relied upon as a basis for investment or financial decisions.